Good morning, guys, and welcome to today's edition of the London Session Open, the daily market update by ATFX. My name is Alejandro Zambrano, and I'm the Chief Market Strategist with ATFX. And we're going to take a look at the markets together and see what's going on. Talk a bit, of course, about the Eurodollar and the NFPs that were really low. That report was published on Friday. Now we should be live. You should be able to see my screen and also hear my voice. If you can't see it, or if you can see it actually, please let me know. We have as well Vincenzo saying good morning. Good morning to you, sir. I hope you're doing well. Hope you had a good weekend. Myself, I managed actually to catch a cold. So if I sound a bit funny today, it's just because I managed to catch a cold. We have a lot of people here today. I'm really happy about that. A lot of familiar names as well, a few new names as well. Stevenson. We have Daryl as well. So a few new names and a few other names we've seen here before, like Sahid, Vincenzo, Vasilios, Taufik, RG, Marvin, Ivan, and Mr. Dan Holm from Sweden. Okay, good. So let's begin. Now, let's begin with the euro. So the euro, as you know, slid quite strongly on March 7th. What happened on that day, as you know, is that the ECB uh, introduced the market with the idea that they're going to lend money to banks. Now, I was selling here. I was hoping to sell actually. I had an entry order to sell at 112.30. So I sold at 112.30. Now that position got triggered on the NFP figures. And the NFP figures, as you know, were quite soft. It was at 20K versus 180K anticipated. So definitely soft figures. As when I saw that, I actually just closed out the position for a 10 pip stop, for a 10 pip loss. My stop loss though was up here at 113, 113.30. So, 10 pip is not too much. In fact, I wouldn't even call it a break-even trade. Now, here, really, what I'm hoping for is really for this market to trade below support. I think that could happen. If we trade below 111.75, then we would move away from the range because the way it looks right now, this could actually go a little bit higher here to maybe 113. Maybe even go back into the middle of the range if people get too scared about what happened on Friday. Now, what happened on Friday that is important to remember is that the non-farm payrolls by itself is a very random number. It has a huge discrepancy. It's not the first time it sort of produces sort of wild numbers. It's been at 300,000. It's been at 20 like we saw last week. So it's a very unreliable number. Now, if you look at the unemployment rate, that's done differently. There is done by talking people with phones. So that is when they reach out to the households. The headline figure is when they reach out to the corporations. So that's why they can deviate. And what's important here is to just look at this with a bit of common sense. It's unlikely that the number were so low as they were. And how likely is it that we're going to have another like 20K reading next month? If we do have another 20K reading next month, I think stock markets is probably going to be tumbling 5-6%. People are going to start to really talk about a recession if that happens, but I think that is unlikely. As well, the ADP figure, which was published last week as well, I think that printed close to 180 jobs, and the ADP indicator is different than the NFPs, and I actually prefer that one because it has less volatility. It definitely varies as well, but it's not as wild as the NFP. So that's that thing there. Now, secondly, again, we know about the ECB. ECB sort of pushed and was the first one to look to stimulate the market again. So if we break below 111.75, we would again deviate from this range. And I think at that point, people will probably be saying, like, forget about the NFP. Let's just focus on the ECB. And let's focus on the fact that US wage growth was really strong. I think that is really what is interesting. Until that happens, this could actually go up a bit. And it's only if you're really bearish that I would be selling here. It is possible to sell, We corrected 50% of the move from the ECB day, and if again, like I wrote in my article, making the euro dollar great again, it's perfectly fine to short sell here, but I'm not selling here myself. I'm waiting for the break here. If we trade below here, we could potentially go down to something like 108.89, 59, sorry. And that would be a risk reward ratio about 3 times the money if the stock would be placed just above today's high. So that's, it's a solid little setup. Here is the GBP versus the USD. So since the market traded below 131.40 last week, I've been suspecting this can go lower. We're dealing with an uptrend, but I said turn of any level is 132, then 131.88. The market continues to go lower. It's now trading below this level here. And what's happening here, I think people are just getting a little bit of panic about a little bit of panic in regards to the vote coming up this week. It's definitely going to be volatile. I think the market is sort of prepared to see an extension. And everybody sort of also thinks that Theresa May still is going to be rejected. However, the vote on the second day, on Wednesday, whether we should be having a hard Brexit or not, I think that was voted down, I think a month or two ago, but it's happening again, that vote. And even though the likelihood of having a hard Brexit is really low, if it would happen, then the GBP is going to move substantially. And I think that is scaring people, and that's why people may be bailing now on GBP. Now, I would not trade this one. I think if you do it, you'll be just up for trouble. It's going to be so extremely well, but if you want to do it, yeah, do it. Trend is bearish below 131.88. We just took out this level here. May trade to the next level, which is 27.89. Always when taking on any position, you need to look at the risk reward ratio. So if one sells right now at these levels, if we trade down to the next low level, you might make 182 pip. But stop loss probably need to go up here. So you're looking to risk 218. So your risk reward ratio is less than 1-to-1. So this is not a good trade idea at all. You need at least a little lift, maybe to 30.80 or something like that. If we trade up to 30.80, and then suddenly you're risking 120 pip to make 294 pip, your risk reward ratio is 2.5. But again, I wouldn't really get involved here. I think it's better just to lay low. There has been, since I traded, when I was starting to trade many years ago, I was very naive. I think like most people are. You just want to get involved in all moves. But it's definitely not necessary. You can actually skip some of these key days, key events, and still trade the day afterwards when things are known many times. Of course, sometimes you can miss out on things, but it's not that you have to be in the market all the time, especially not these events, because you can easily market can be up here and then 2 days later it's down here. So, or maybe it goes down here and then it goes up. The market is a bit weird. Dollar versus the Japanese yen maintains a bit of a bullish uptrend. As you can see, the market is creating these higher and higher lows, and it should really just trade upwards. The market is bouncing from the buy area. The S&P 500 is seeing a little bit of stabilization. The question here is if you sort of believe the S&P is going to go lower, which I think is going to happen, then you wouldn't really be buying here. But this is an uptrend, so I want to continue to be bullish. Gold prices bottomed out from the low, which I think makes sense because the risk reward ratio was not good to sell. It's moving upwards a little bit. I think it can continue to go slightly higher to 1307. 1320, but as long as you're below 1328, I think we're probably going to roll over and then go lower. Crude oil prices are up a bit. Unfortunately, though, they did slide below the trend of funding level at 54.94. That happened on Friday. Didn't have a strong sell-off. I'm going to get rid of that now, and I'm neutral here, but I'm focusing on the big picture. Bullish uptrend. And if we take out 57.89, which is this year's high, we could probably go to the next resistance level. Actually, this isn't a resistance. This is a target based on a rectangle. So up to 61.81. S&P this is gonna be interesting here. Like sometimes when I try to figure out what's a good take profit level, like in this situation, if I don't have a pattern, if you have a pattern like head and shoulders or a rectangle, it's easy to say, okay, this is the entrance, this is the take profit, this is the stop level. But when you don't have any of that, when you just have the end of a trend and a little breakout, then you need to get creative. So the target for this bearish downtrend is what I think people would like to buy. So the take profit for the short is the optimal entry level to go long. So where's a good or optimal entry level to go long in this market? Well, we need to take a look at a few more like data from October. So you have that decline, and then you have a strong rally, right? And I think down here around the October 29th low, November 23rd low, that's a good little spot. So if I take fibs from the low to the high, you can see the first fib is pretty much down here. So I think that is a reasonable level. Now what's happening now is that the market is moving upwards, it's moving to the breakup point. So this was the opportunity to short sell. Remember that I showed in an article up here under technical analysis, I shared an update where I said the Russell 2000 slips 4.3% from its 2019 high. Will the S&P follow? The S&P at the time, the Russell was already going lower, as you can see here, but you can see here how the S&P 500 was sort of just trading lower. So the February 21st low here was the optimal entry. Now we're revisiting that point. What's interesting is this though, like if one already shorted here, it is possible to lower the stop loss, maybe a tiny bit to something like 27.92, or maybe you can even put it here at 27.79 or 27.80. If one does that, and let's do it, then the actual effective risk here is not a lot. So if we get stopped out, it doesn't really matter. This is what I do most of the time. Get a good entry, reduce the stop losses. Most of the time, about half of the time, I'm able to reduce my stop loss. And that means that I'm risking less. So if I'm risking, say, just for the sake of it, 1%, if I can do this, I'm risking 0.5%. If I just do that, automatically my average loss is going to decline. And if I stick to my take profit levels and leave them unchanged, I'm going to get that full return, but my average loss is going to be slightly smaller than initially estimated. And then automatically your risk reward ratio, so average profit over average loss, becomes positive. So I would reduce here, trying to find a level. We're back up now at the breakup point, and I think about here people were probably going to short sell, looking for the market to go down to 26.80, which is the next sort of support level, but possibly all the way down to 26.25-ish, down at these levels down here. German DAX, very, very close to trading below trend defining levels, very close to ending its uptrend. If I'm right about the S&P, then this is not going to survive. But for now, the trend remains bullish. So if you really think that stock market is going to go upwards, then this could be better than maybe the S&P. And as well, here in the German DAX, you have something like Deutsche Bank, for example. And Deutsche Bank increased a bit on the news that the ECB would introduce TLTROs, or ability for banks like Deutsche Bank to borrow money cheaply from the ECB. So you're having that little factor there supporting European equities a bit more than in the US. So this could be interesting from that point of view. And I think that's pretty much it. Most markets right now, by the way, guys, are trading sideways. S&P 500 is on the big picture since October, actually since last year really. This is not a trend. So since pretty much January 2018, we just trading sideways. So there's not a strong trend here to work with in this market. And there's definitely not a strong trend in the euro. But things are starting to look interesting, and in particular for Forex pairs. Maybe the dollar index will break its levels here. This is a market, the dollar index between since October. Really, really close to taking out its high. That might happen maybe over the next few days. So we need to be paying attention to Forex markets more now than before, given that we might have a resumption and the uptrend, and given now that the ECB made the first steps to be dovish. Okay, so that is what I would recommend. As well, we need to be careful with risks right now. All systems have their period of the year when they were good. I use a trend following system. I like to trade breakouts and with the trend. And the last few months, they haven't been really productive. I'm down for the year. I'm down with about 3%. At one point, I was up with 6%, but I'm now down with 3. And it's like that sometimes. It's just a lot of waiting. And then eventually the market is going to start to be very, very active, really, really busy. And it's important to make sure that we have capital, that we have maximum amount of chips to be able to trade. Okay, so that's what I'm doing. I'm trading slightly less, being more selective in my positions, because I know there's going to be coming a time when the market, everybody sort of knows, buy dollars or sell dollars, or buy the stock market or sell stock markets. And it's going to be very, very clear what's going to happen. At that time is when it's time to sort of push leverage up, add more risk per trade, buy more positions, double up, and things like that. We're not there right now. Right now, everything is a little bit choppy, and it's our responsibility as traders and investors to make sure that when the good time comes, we're able to capitalize on that. And if you're doing really good now with your mean reverting strategies, then yeah, just continue to do the way you're doing. But as soon as you start to see things trending again, and if you do start to lose money, then pay attention so you're not caught up in a trending market and you're applying a range bound system. What you do at that case is that you need to go to a market where there is still some range bound conditions. Okay, I think that's pretty much it. Guys, do you have any questions? Then please let me know. As well, don't forget to check out the technical analysis section here at ATFX. I publish content here. You'll find that as well on my Twitter. We're gonna update this. This is all gonna be revamped this week, hopefully. We're gonna have another section called market news and then just technical analysis. Those are gonna be the two sections where we publish content. So you want to check that out as well. I'm gonna be in Hong Kong next week for some business. I'm gonna meet the team at ATFX over there. If you do have any questions, you do want to catch up or something, grab a coffee or something, you're most welcome to visit me at the ATFX offices. We can talk about ATFX. We can talk about anything else that I do as well. So do let me know if you are in the area. I'm going to be there from Tuesday to Friday next week. That means that we'll definitely do the morning updates, but I'm not sure I'm going to be able to do them every day, but assume that I will do the updates. As well, we do offer a few new things here with ATFX. We offer coaching sessions for anyone that opens Edge account. An Edge account is very easy to open with ATFX, and you get spreads on Eurodollar from 0.6, but you also get very tight spreads on many other things. So you have trading, retail, Edge account, and in here you'll find all the different spreads. You can see they're extremely competitive. All the miners like GBP Aussie at 1.3. You won't really find that. And as well on GBP USD, I think we're tighter than, I did a simple little test, and we're tighter than FXCM, tighter than CMC, and tighter than IG. So we're very, very tight across pretty much everything here. So check it out, as well as you get the coaching sessions. Okay, I think we're going to wrap things up. Guys, if you have any questions, you know how to reach out to me. You have my email, alejandro.zambrano@atfx.com. Thanks so much for watching, and see you guys tomorrow, same time here at atfx.com. Thank you.